Good afternoon. George Cavaligos for HFT Bonds. Guy goes away for a vacation. I miss 3-point rally and then a 5-point break. Can't have everything. I think I'd be divorced if I hadn't gone on this vacation. Wife was out of graduate school. She basically said, we gotta go. So, all right, well, back at it. Get back today. Notes are just getting drubbed. 5-year notes, 10-year notes, all making new lows. The bonds still haven't taken out the August 22nd lows today. We're, I think, about 10 ticks away from it. I imagine we'll go look for that tomorrow on the unemployment data. Tomorrow's Friday. Obviously, the non-farm payroll data is there. That's going to be the key. I think the market's priced in. You know, the back of everybody's mind is a 175,000 number, but I think people are sort of braced for bigger numbers. Probably closer to 200, I think, is what people think in the back of their minds right now, or I guess we used to call that the whisper number. So we'll see what happens tomorrow morning on the number. I'm looking at the 10-year and the bonds with some fairly important support levels way down below the market, 121.25 plus to 121.26 plus in the notes. The bonds, it's a different beast because they haven't made those new lows yet. Let's see what happens with the old lows. What was that, 128.08? So we're about, half a point from there right now. Wouldn't be surprised to see a lower low, maybe a 128 even kind of thing, and then maybe a bounce. I think you'll see some short covering in front of the weekend. Open interest up kind of in the D's contracts. A lot of weird stuff going on. The short end of the curve, big increases in open interest in the D's contracts, big decreases in the SEP contracts, net with increasing, confirming this down move. The bonds, on the other hand, we're seeing big declines in the SEP open interest as shorts cover, but they're not reestablishing as many shorts in the D's contracts. So open interest is actually declining in the bonds, not confirming this move down and pointing towards the mortgage market, in the 5-year and 10-year area of the curve leading the way lower. So we have to watch the 10-year. Given my druthers here, I'd love to see the market bounce off of that 121.25 plus 26 plus area. Again, remember, these are kind of areas. They're not, specific levels, like it's going to go to 121.25 plus and then bounce. If it goes to 121.24 and bounces, similar idea. That's kind of my game plan right now going into the data tomorrow morning. I don't see any reason for us to see a significant bounce yet. The stuff in Syria was priced into the market. We saw a 3-handle rally, and then the market's come back off again and taken out that rally completely in the notes and somewhat in the bonds. We might have to wait until we see the FOMC meeting later this month. I think that's going to be obviously the key. Looking for more guidance on this whole taper thing. From talking to people today, I think most people are looking for a $10 billion taper as sort of the first step in the Fed scaling back these purchases. So that's the plan, guys. See you in the morning email. Take a look at our service. Give it a try.